We are back with the American Business Person, your host, Rich Killian, and special guest, Chris Amundsen. Let's roll into the top 10 accounting mistakes that businesses make. Number one, they don't pay attention to their accounting needs.
People are generally afraid of taxation, generally afraid of accounting, certainly afraid of the consequences of not actually filing their tax returns. It's such a large and unruly subject to get your arms or your hands or your head around that a lot of people would just stick their head in the sand and expect it to go away, and of course it never does, and ultimately a lot of times it'll get them shut down.
How about business owners that have the wrong structure for their taxation and legal needs?
We spoke a little bit about a person who should have an S-Corp versus a single-member LLC. The opposite is also true. A lot of people should actually be in some sort of a trust structure for some sort of a business entity, depending on what their estate needs happen to be. There are certain instances where it really is important for a person to have a regular corporation instead of an S-corporation. You have a company that maybe someday is going to go public and ultimately have thousands of owners. They should have a C corporation. The proper business structure, given the taxation and legal purposes of the business and their ultimate goals. We see a lot of those mistakes out there.
Can a company ever switch from an S-Corp to a C-Corp?
Absolutely. You are not able to switch them back and forth every year given your needs. You're required to keep the same business structure for 5 years. At that point, you're allowed to switch back. But, yeah, you can't switch.
Okay. How about businesses that don't keep proper records?
A lot of businesses that don't keep paper records, or a lot of businesses that do most of their business in cash, don't actually keep the receipts. And a perfect example would be, let's say that you have a cash business, and let's say that you pay for most of your cost of goods sold, most of your products in cash. If you don't actually keep those receipts, how can we actually deduct all of those expenses off of the income tax return? If we don't have those receipts, we can't back it up. A person could possibly lose hundreds of thousands, tens of millions even, of dollars of deductions on an income tax return just because they don't actually have the paper to back it up. Very important to keep your records in paper format.
Okay, so speaking of paper format, keeping them for a minimum of 9 years, is that the rule?
At the federal level, from the standpoint of audit, they can look back up to 7 years. In the state of Illinois and most other states, they can look back up to 9 years. A good general rule of thumb, and let's face it, if they can actually prove fraud, they can go back to the beginning of time. So a good rule of thumb is to keep all of your paper records for 9 years. A better rule of thumb is if it's accounting and it's paper, don't ever throw it away.
Okay, corporations that don't file or pay payroll tax and sales tax in a timely fashion?
Payroll and sales taxes are treated much differently than income taxes in that you're withholding money out of a payroll check that isn't yours in the first place, or you're collecting sales taxes from a customer and you're considered the trustee on behalf of the government. If you don't actually file and pay those timely, they will come after you personally for those amounts rather than coming after the business. And it's a very difficult thing to actually put into an offer and compromise if you're still actively in business.
And what about the corporations or LLCs, if you will, that don't file or pay income tax timely?
Income taxes are different than the payroll and sales taxes, but still very, very important thing. If you don't pay your income taxes over a 3-year period, sooner or later a revenue officer will normally knock on your door. Never a happy day. And at that point, once the tax returns are filed, the interest and penalties are so egregiously high that, taxation to the government's a lot like a religion. You don't do something right, they want to slap you on the hand so hard that you never do it again. And that's exactly what they do with the penalty and interest.
Any forgiveness on that?
On penalties and interest, certainly they will forgive some interest if you go through an offer and compromise. Certainly they may forgive some penalties. It's much easier to do an offer and compromise if the person is out of business. At that point, you're not running afoul of the discrimination laws in so much as you and I are in business and you actually pay your taxes on time and I don't. It's looked upon much differently. It's not impossible, just a lot harder to do.
How about companies trying to do their tax returns themselves?
Seeing a lot more of this now with the advent of personal computers and TurboTax and QuickBooks. Again, your normal business owner doesn't know the tax law. A lot of this just comes down to 20 years of actually doing this and figuring out right from wrong. It's not anything that you can actually read in a book and have a solid understanding of. It really comes down to the interpretation of the tax law and what is right or what is wrong. As such, people that do their own tax returns are generally audited a lot more often than people who go to a seasoned taxation professional to handle their taxes. As such, it's very dangerous for a person to try to do their own tax return.
Well, rolling into kind of the next point is those seasoned professionals who might not be doing your taxes right in the first place. What are the repercussions for that?
Audit, interest, penalty, tax evasion, possible jail time, foreclosure, bankruptcy. It runs the myriad and everything in between. Again, if you expect to stay in business, if you want to have a healthy business, if you want to be able to sleep at night, pay attention to this. Get it done. Get it done on time.
How about for the company that's thinking they're doing it right, and then they hire let's say a CPA out there that's not doing it right? Ultimately, it's their responsibility as the owner, but any repercussions are, for that CPA?
Certainly, if you knowingly aid in the perpetuation of a fraud. In other words, if I help a person to knowingly evade income taxes from the federal government, then I will have problems. The jail cells actually hold more than one person. Not only that, they'll put me on all sorts of lists. It's called the QP, the Questionable Preparers List. And one of the reasons they force us to put all of our EIN numbers on all the returns that we do and our personal Social Security numbers is so that if they audit one of our clients and they see that we helped a person cheat, they'll just audit all the rest of our clients. Because if I did it once, they'll probably do it again. It's one of the ways that they shut down bad CPAs.
Okay. How about companies that don't do proper tax planning?
Tax planning is a very difficult subject. A lot of times you're going to deal with a customer that, I don't want to pay tax, so at that point you will legally deal with the balance sheet and have the treatment so that you can legally reduce the tax. On the other hand, if you know the customer in the next couple of years is going to go and do some financing, that you're going to want to push up that income. So, of course, you'll legally have your balance sheet treatments. Again, it's an old story, what's 2 plus 2, Mr. CPA? Well, I don't know. What do we need it to be this year? That's the true art of the public accounting industry, and there's nothing illegal or wrong or creative about it. Tax planning is exactly that. A good CPA or a good EA is going to meet with their client 2 or 3 times a year, actually going over the tax returns, the ramifications, exactly where they are and what they need to be, and ultimately where they're going to be going with this.
Okay, and lastly, what about companies that don't learn from past mistakes?
You hate to be grandfatherish about these sorts of things, but the definition of insanity is doing the same thing again and again and expecting a different result. I don't know how many customers have come to me and they have a problem, so we fix it. Okay, they're fine for a year or two. What do? The same thing again. A lot of times you feel like an enabler. Certainly there are customers that learn from their mistakes, certainly most, but there are other customers that just do the same thing wrong again and again and again. And ultimately, it's a very sad thing to say, but an important thing to say that it certainly is one of the top 10 mistakes that business people make in accounting.
Okay, great. Well, Chris, thanks for being with us today. Do you have any contact information you'd like to publish here?
Well, we can be reached on the World Wide Web at accountingsolutionsLTD.com. Our local telephone number is 773-267-7500. We have a toll-free number of 888-310-0300. We'd love to hear from you and try to help you, and we'd love to provide some accounting solutions for you.
Okay, thanks, Chris.